So one of the keys as you're walking up the journey is to ultimately get to a continuous planning. And what this is basically moving yourself from doing a plan on a business once a year or quarterly. It's where you're actually doing that planning on a continuous basis based off of changes that we've captured during our continuous business cycle. So in this particular area, we want to look at and understand how is this affecting both our accrual basis, right, what the accountants look for, and a cash basis, which at the end of the day, we're all doing this to get money in our pocket. And so understanding how, when we put a budget in place, when we can expect that to be recognized on a project, what are we expecting the costs to be? What do we expect the revenue to come in or the cash to come in? Or what labor are we going to need? Do we need to hire? What does our business model look like as we hire? Because we're starting to see a buildup and backlog, and we know that we're going to need skill sets because the project types that are flowing through are more of a unique skill set that we don't have. Or do we need to go ahead and go and get some outsourced personnel to fulfill our needs on a workforce basis, as opposed to hiring an employee that's a long-term investment? And so these are some of the things that continuous planning is doing, but it's looking this not just one time, but on an ongoing basis as things change, as new deals are closed, that we can go and look at a new deal closed, actually then start forecasting out the revenue, forecasting out the cost. How is that going to affect our cash position? And so this ultimately requires us to look at those variables, such as what is the date that's driving it and the labor hours. And so as we look at the lower side of this grid at the lower left, we're actually starting out with a budget, right? This is what we think our plan is. But then as we move through that project, we're getting more information about that project that we can go and that's changing what our plan should look like. So now instead of using that budget in our plan, we're now using that forecast in our plan. Then as we create invoices for the customer or do purchase orders to fulfill our project needs, now we're using that information as opposed to our forecast or our budget, because we're getting more and more accurate and more close to the actual. So our variance should shrink as we kind of go through that, and ultimately following that till it hits cash. And so this is part of that continuous process where we're getting closer and closer to the end, and we're able to update and get more and more accurate information. So Michael, during this process, I know this is something that you guys are now going towards, and that's one of the reasons why we're going from a level 4 to a level 6 in the process in a connected system, is what are some of the things that you see that you would want to drive in a continuous planning basis?
Yep. So at where we are right now in the process and where we want to go largely revolves around two main factors. And you really nailed it, Jim. It's the revenue and expense recognition, the accrual side, and then we say cash is king on the cash side of the inflow and outflow. So our main objective is to really get ahead of that and have an understanding of how will we be recognizing revenue? What will our gross profit look like over the next 30, 60, 90 days? And then what is our inflow of cash and reserve of expenses? What is that net looking like over those next that same time period? So able to provide that information to not only senior leaders, but to the executives is crucial, because then that leads into bigger picture items such as resource hiring, third-party hiring, investment into the company. And that ultimately is the goal here at Envoy, and I would imagine at many companies.
And I think the whole point there is that you're able to make your decisions on investment or don't invest based off of real information and accurate information. And that helps drive this continuous plan. But it also, over time, people get smarter in understanding their business because they're now looking at it in different ways. And they're seeing the information that's really the drivers versus the assumed drivers that may not ultimately align, because you're not actually comparing your actual plan to the actual results. And so that's where you're going to start seeing a lot of benefit of this, is the more often that you do your planning, the more often you compare that plan against actual, you're going to get better at actually planning and driving the business.